The next Fed FOMC meeting is in just over a day, so what will happen, what will be said, how will this impact the markets, and what will happen to the Bitcoin price? Hello everyone, my name is J1 General and welcome back to another cryptocurrency video. In today's video we will be discussing the impact of what will happen within the next Fed. I will give some predictions and analyze how these predictions from the meeting will affect the cryptocurrency asset class. So if you like this type of content, make sure you hit that like button, make sure you hit that subscribe button, as it always makes help the channel grow. And if you are a fan of cryptocurrency, I have a cryptocurrency shop where you can shop cryptocurrency products. I'll leave a link in the description down below so you can get 5% off your next purchase. So without further ado, ladies and gentlemen, let's begin. And we have this FOMC meeting tomorrow, and it just feels like whenever the next FOMC meeting is, whenever it is, it feels like it is the most important one today. It just almost feels like as every FOMC meeting passes, it just feels like the most important one. But I feel like with this one it won't be as important as the ones that come up in the next couple of months or so. So let's take a dive into the meeting probabilities with regards to interest rates. And interest rates has some sort of correlation with the Bitcoin price, which I will analyze towards the end of this video, so stay tuned. But let's discuss the interest rates first. We are currently around 5.25 to 5.5 basis points with regards to the interest rates. The next meeting is, of course, tomorrow, and the market is expecting that the Fed will pause rates for this meeting. And I am of the opinion, even though I am not a sheep, I am not a follower, I am of the opinion that I agree with the market. Why would I say that? Well, I say that because if we take a look at some economic charts, just like the inflation rate, we can see that inflation has not met the target of the Fed. The Fed's target is 2% inflation, and currently inflation is around 3.4%. It is currently struggling. Well, it's been at these levels since mid 2023 actually. So and I said this on Twitter as well, and I said on X, sorry, I beg my pardon. I said this on X that it is easier for inflation to go from 9% to 4% than it is for inflation to go from 4% to 2%. That's just the way it is. I've also said this in prior videos. But for those who believe that it's easy to reach the Fed's target of 2% because we're currently at 3.4%, no, it doesn't work like that. It doesn't work like that. It is much easier for inflation to go from 9% to 4% than it is to go from 4% to 2%. Do you understand? So because we haven't met the Fed's target of 2% inflation, they would like to keep rates higher for longer, only if the unemployment rate is still quite low. If we take a look at the unemployment rate, yes, it is still quite low. You can see I've had some drawings in there in the past, but you can see that the unemployment rate is still at 3.7%, even though it has started an uptrend. And when the unemployment rate starts within an uptrend, that's not a good sign. But with that being said, the unemployment rate is still under 4%, which is good news for markets and good news for the Fed, because then they can keep rates higher for longer until they reach their target of 2% for inflation. That is why I think that the Fed will keep the rates paused in this next meeting. If we take a look at the next meeting, which will be on the 20th of March, and we know that March, in especially halving years or election years, March tends to be a very sticky month. If you remember 4 years ago, that is when the penultimate pandemic occurred and markets dropped 50% within the matter of days. Do I think the same again can happen? I highly doubt it, because the pandemic was again a black swan. But even though a black swan occurred, there was still some economic data behind it that suggested that a narrative could trigger such a move. like the yield curve, for example, which is why I don't like to throw around the term black swan, because there were some indicators that were warning us of a severe crash. It wasn't because of a pandemic that caused it. Do you know what I mean? So if we take a look at the next Fed meeting, it is more of a probability that the Fed again will keep rates paused. Now this figure keeps changing, because I remember looking at this a couple of weeks ago that the Fed was more than likely, well, the market makers were predicting that the Fed is more likely to cut rates in March, but now this figure has changed and the market favors a pause in the March meeting. It is not only until May where the Fed or the market makers predict that the Fed will cut rates, but this is where it gets interesting, because the market makers actually predict that it is more probable that the Fed will cut the rates by 50 basis points than to keep them paused. Yeah, so it's highly probable that the Fed will cut rates by 25 basis points, but it's more probable that the Fed will cut it by 50 basis points more than a pause, which is highly interesting, because you have to think, yeah, and I'm going to analyze this as well when I discuss the Bitcoin price with relativeness to interest rates. Cutting interest rates is bullish for risk on assets. Yeah, it is bullish long term, because that means quantitative easing could occur where the Fed prints money like crazy, which allows risk on assets to thrive. But the reason for cutting rates is what is bearish. I'll explain that soon, but let's take a look at the Bitcoin price. I want to explain that in more detail, guys, because some people actually do not understand this when I say this, and it's very important for you to actually understand this. So if we overlay this with interest rates, set a new price scale, there we go. So allow me to explain what I just said. A lot of individuals believe that cutting rates is bullish. So when we take a look at last cycle, and for Bitcoin we can really only take one data point, because Bitcoin was created in 2009 and it's lived a relatively good economic cycle with regards to printing money. Some argue that's why Bitcoin has done so well since its creation, is because it's had an easy monetary path. But if we take a look at last cycle, because last cycle is the only point of reference, again, cutting rates is deemed as bullish, yeah? That's what individuals believe. But Bitcoin price peaked at the last time the Fed paused. Once the Fed started cutting rates, the Bitcoin price started to drop, yeah? And it's not only until the Fed paused again where price started to go back up, and then the major cut right here is what sparked this major downturn in price for Bitcoin, causing markets to drop over 50%. Yes, once the rates are down at zero, that is when Bitcoin thrives. Just like here, look. Bitcoin thrives. And even if it's low rates as well, Bitcoin thrives. Yeah. So risk on assets thrive when interest rates are at its lowest, not when the Fed cuts for the first time. Because when the Fed cuts for the first time, it means they've broken something and they've held on to something for too long. So the Fed right now need to weigh up their options. They're in a sticky predicament, which is why I'm kind of sympathetic of them. Because if they keep the rates higher for longer, and they keep them high, the unemployment rate's just going to go up, yeah, even though inflation is sticky. But if they cut too early, then they run the risk of inflation shooting back up. If I get rid of this chart right here and expand this, if the Fed cut rates too early, then they run the risk of allowing inflation to creep back up. If you look at the 70s, inflation went up, went down from interest rates, and then spiked back up again. So the Fed needs to be careful. Yeah, they're stuck between a rock and a hard place because they don't want to cut too early as that would lead to inflation soaring again, but they don't want to cut too late because that will essentially break the economy in half with keeping rates higher for longer. So, by looking at the Bitcoin price, if we overlay this with interest rates yet again, and we can understand that, okay, the Fed is going to pause again. Yeah, in Jan. The Fed's going to pause again in Jan, so the Feds are going to stay at 5.5. Come March, if we draw a line for March, which will be somewhere around here as it's the end of March. We also have the Bitcoin halving, which is in April. Coincidence, right? Yes, I know. So if we then draw a line here for the next one, which would be in May, right here. So the Fed is expected to cut rates for the first time towards end of March. Then we have the Bitcoin halving in April, and then we have the first rate cut expected in May. So what can we go off this? How can we predict some sort of price action with this? Well, I believe if the Fed is expected to hold until May, what happened last cycle? So Bitcoin price actually peaked when the Fed first decided to cut rates. So what would that mean this time? It would mean that the price of Bitcoin will peak out in May. Yeah, it would peak out in May. So what would that mean? That would mean that, okay, maybe the narrative of the Bitcoin halving and then the Fed cutting for the first time in May, could Bitcoin actually top out in May and break this high of 48k currently? That's certainly possible. You can't rule that out. It happened last cycle, so we have to be open-minded enough to think that it could happen again. But what if there's a spanner in the works and the first rate cut is actually expected in March? Well, then we can expect a peak in March, right? And then if we take a look into the future, it looks like the Fed will essentially fully cut their rates by the end of the year. So if we go to the end of the year and draw a trend line by the end of the year. So if we get this sort of scenario by the end of the year, that would also be confluent enough for Bitcoin to go on its parabolic rally, to be confluent with its 4-year cycle, and then I'm just going to draw some lines. So let's say it peaks in May and then drops back down come the end of the year, and then off to the races for Bitcoin. And it could look something like this, which looks exactly like its 4-year cycle playing out as always. Yeah. It could just be one big massive coincidence. We just have to wait and see and take each meeting one by one, which is why each meeting is the most important one today. Yeah. So that's it from me today, guys. I hope you all enjoyed the video. If you did, make sure you hit that thumbs up. Make sure you hit that subscribe button, as it always means a lot to me. Let's see how this plays out. Again, the Fed meeting is in just over a day. I can't wait to see. The market will be very volatile this week because there's a lot of data coming out. You know, there's a lot of stocks and their financial data coming out. You know, there's so much coming out. You know, job data and all of that good stuff. So just have to wait and see how this week pans out with regards to the economy. But yeah, that's it from me. It's been your boy, J1 General. Thank you and goodbye.